Good morning, everybody. My name is Vicki Benjamin. I'm currently president of Calvert Investments. As you all know, we sold our assets last year to Eaton Vance, and I'm right now, unfortunately, liquidating the company, but looking forward to starting something new, which we will be talking about probably next year. I was so excited to be the moderator of this panel. This is a great group of women. I'm going to let them each give a brief introduction, but I'd like to summarize it saying I've got 2 doctors, 2 founders, and a pioneer here. With that, I'm going to turn it over to Ruth.
Hi, Ruth Shaber. I'm an OBGYN physician and founder and president of the Tara Health Foundation.
Hi, I'm Alicia Robb. I'm the managing partner of the Next Wave Impact Fund.
Good morning, I'm Madji. I'm global operating partner at Dalberg and co-founder of the Women's Investment Club, all the way from Dakar, Senegal.
Hi, my name is Angela Lee. I'm the founder of 37 Angels, and I'm the Chief Innovation Officer at Columbia Business School.
Great. So with that, we're going to discuss what we think is impact investing. All of the ladies up here represent different parts of the capital market, some where it's special financing, some large cap stocks, and we want to really discuss how impact investing is personal to us and what it means. And I think the other committees and other panels have also explored that, but we're going to take a little bit more personal look at that.
Great. I'm an OBGYN physician. I spent my career as a clinician, taking care of women, taking care of their health needs broadly, but also really focusing on reproductive health as one of my areas of specialty. And that included contraception provision, and I was an abortion provider. And I recognized at a very early point in my career the fundamental importance of providing women with control over their fertility as a way of maximizing their social and economic potential, the potential for their families and their communities. So when I had the good privilege of founding the Tara Health Foundation 3.5 years ago, I brought that same commitment to my philanthropy. And it was clear from the very start that we needed to deploy 100% of our assets towards this mission. So I never had any moments of wavering. I knew from the very beginning. And even though I had no background at all in finance, I still often will use the excuse that I'm a physician, so you have to explain those acronyms to me. I don't know what I'm talking about. But I really do, because it's so largely common sense. So when you can cut through the jargon, the bottom line is that I was interested in deploying every asset class within a diversified portfolio, specifically for the mission of improving the lives of women and girls. And we had some great advisors. I had the luxury of starting largely from cash or very liquid assets, so I didn't have the legacy issues that many folks are burdened with. And I also had a very small board that we were able to educate ourselves and get going very quickly. So I'll just say that we were privileged in that regard.
Thank you. Allison?
Alicia. Hi. So I actually got into impact investing through microfinance in grad school. I was interested in women's empowerment issues in Central America and got into it through microfinance, which led me to small business finance when I was writing my dissertation and working for the SBA, and then going into more small business finance and entrepreneurial finance after my PhD at the Board of Governors during the Greenspan days. And I was really focused on the gender gap and the racial gaps in small business financing and entrepreneurial outcomes. I then went to the Kauffman Foundation for more than 12 years and was very interested in the whole crowdfunding and democratizing access to capital. Started doing crowdfunding investing and then became an angel investor. But in my research with the Kauffman Foundation, really looking at why there are such large gender and racial gaps in entrepreneurship, but they're even larger actually on the investor side. And so looking at what was driving why so few women and minority entrepreneurs actually grow and access equity capital, we see that most of the funders are not women and minorities. And so I really was looking at why aren't there more women and minorities in angel investing. Because if we get more diversity on the investor side, we're going to get more diverse teams funded. And the more diverse teams get funded, the more successful entrepreneurs we get in our society that go on to then become angel investors, board members, mentors, advisors, role models, co-founders, employers. And so it's this virtuous cycle, and I decided to really tackle the impact or the investor piece. And so in doing the research, what came out of it is why isn't everyone that could be an angel investor an angel investor? You don't know about it, you don't know about you don't know other angels, you don't see deal flow, you don't know how. It's kind of scary to make this first large investment into a company where it could go belly up. I mean, the way we get non-successful and non-persistent angel investors is people who make one large investment, lose it, and they say, well, that wasn't any fun, I'm not going to do that again. So how do we get people to become and be successful at angel investing? And I think this whole education and training piece and in a learning environment. So I did 2 pilots that brought together nearly 200 women in the US and Europe in learning by doing models where you would have training and education, be mentored by experienced angels. You get a diversified portfolio so that one investment isn't in one company, it's in 10 companies. And so building out a diverse portfolio. But more generally, I think the whole venture capital and angel system is kind of broken. I don't think we need to accept this standard status quo of we invest in 10 companies, 8 go belly up, 1 maybe returns your capital, and 1 is a home run. I think the societal and economic destruction of 8 failures out of 10 is something that we just shouldn't accept. And so by creating a diversified portfolio and supporting these companies along the way, I think we can improve successful outcomes along all of those, for all of those companies, not just accept 8 failures. So that's kind of where well, we'll talk more about it in detail, but that's kind of where we're
I think Angela has something to say, being
Oh,
yeah.
no, I was just excited about everything that you're doing.
Great, thank you. So for me, with my role at Dalberg, we're an advisory firm very much focused on impact, so doing a lot of work in developing countries, whether it's consulting as well as investing. And we've been very fortunate to work with a number of foundations, with the Global Impact Investor Network, with governments and a host of stakeholders in this space who have asked us to help them think ahead. How do you structure this space? How should they engage? And just sitting in a developing country also, what are the right sectors to think about? So we have spent a lot of time designing these tools, and again, it's been a huge privilege. We've also realized, and I loved the question earlier about democratization of the space. We've realized also there's a gap within developing countries as to how do you engage in investing. We sometimes go back and forth as to what is it, are they specific sectors, is it environment and social, is it financial returns, and how do you think of the other, how do you measure impact? That's a huge question that everybody asks themselves. While we do think about those spaces and or these questions, it's quite critical, we also said there are gaps we're seeing and how do we engage in them to be very concrete. So one of these spaces for us has been in terms of women in these countries, in my particular case in Senegal, a francophone country where the tools and methods to invest sometimes just don't exist, and where the environment can be very, very complex. So Dalberg has been incubating the setup of a women's investment club, and we're now working on setting a syndicate fund. It's been a fantastic adventure. Next year, we hope to make our first investments. Without doing much publicity, we have 70 women from the region who have joined us. We have 3 or 4 other countries who want to set up the same mechanisms in Côte d'Ivoire, in Guinea, in Mali, who are just saying there's a strong signal here that people sitting in developing countries can also mobilize capital and can invest in the growth of enterprises in their regions. I think part of the most exciting part of the journey is sometimes trying to think about a syndicate fund, which in the US might be the most basic and simple thing to set up. And for us, it's always, can you call the Ministry of Finance? And they say, well, we've never heard of this, so call the central bank. We call the central bank. They'll say, well, put forward some options, and let's think together how we build these ecosystems. Another word I heard earlier that really hit home. I'll stop there, but looking forward to sharing more about our adventure.
So 37 Angels, I would say, has impact in two ways. One is a direct type of impact investing. So we're 70 women, and we've made about 50 investments, and about a third of them are, impact investments, education technology, healthcare technology. Shout out for Ballot Ready, which is a new investment we just made. They do nonpartisan or bipartisan voter guides for non-presidential elections. So I'm going to be honest, I don't know who most of the names are on that ballot when I'm voting, and they help to educate voters on that type of stuff. And so that's when we were having kind of direct investments in impact. And then the other piece is that we also are big fans of education and community. So we have an investment boot camp that teaches women how to be angel investors, and it teaches you valuation, legal terms, all that fun stuff. And at the end, you invest in a real company and join the network. And I think the way that has impact is women are going to invest in different types of ideas. And we need more when we all know that diverse teams lead to better outcomes. And so that's how we have impact. And then just because the previous panel talked a lot about defining impact for yourself, and I think one of the things that's nice is that you can define that however you want. And so a way that we have impact that might not seem directly relevant is angel networks are just known for being really slow. A statistic I heard was that it takes the average angel network 187 days to get back to a founder. As you can imagine, a founder might run out of money in that time. So we get back to founders in 4 weeks. Something else is that there's a lot of venture capital funds who are like, the only way to get to us is through an introduction. And I get that. You get, no doubt, higher quality deal flow if you are introduced to deal flow. And so we look at about 2,000 deals a year, and while about 2/3 of that is unreferred, if you look at our portfolio of 50 companies, 41 of them are referred. So the efficient thing to do is we should only take in referred deal flow, right? We'd save a ton of time, we get better, higher quality deal flow. But to the point about equitable access to capital, we don't think that's having impact. So all this to be said, lots of different ways to have impact, and we try to do it not just through kind of investing, but just the way that we operate as a company.
Thank you. Given the upcoming transfer of wealth to millennials and women, how do we attract millennials and women into impact investing? What do you each think are some of the headwinds, and how are you addressing them?
Well, in my case, the bulk of our assets are in the public space, public equity, and I think that's one of the best opportunities. We talked about democratization. I believe that is a place where if we, as philanthropists, often will be focused on the private sector, but if we could expand and develop that space, I think there would be tremendous power. One of the biggest obstacles we're facing is clarity of terminology. In the gender lens space, it means something completely different. We just had a wonderful event at Wharton, and there were 115 of us, and I think we all had our own definitions. But the impact of that as a consumer of these products, and especially coming in relatively naive to this space, that it's not just how you describe a fund, it's what the fund actually contains. And in my early journey here, I was finding that a women's fund at one bank or at one investor's portfolio meant something completely different from somebody else's. So one of the issues that I feel extremely passionate about is standardizing our definitions, whether it's within a women's fund or a climate fund, that we all need to agree upon what the issues are. It doesn't mean that the fund that we invest in has all of those elements, but we need to be able to compare one to the other and know what we're buying. And if we can get that sort of clarity, get some standardization of data, standardization of definitions, it's going to be much easier to sell it and expand it to other people who are new to this space, because then they're not going to have to reinvent it for themselves.
Alicia.
Yeah, I mean, angel investing is a bit tricky just because, one, it's a risky asset class, and you have to be an accredited investor by the SEC's definition, which is, 200,000 in income or $1 million in wealth. And, for those of us that don't have family money, millennials aren't quite there yet, and so it's hard to engage them in ways that this asset class offers. However, in our case, in our fund, you have to be an accredited investor, but Impact Assets actually put together a donor-advised fund for non-accredited investors to donate money and then become part of the fund that way. But in general, I think there's some progress with the Jobs Act and the Title III crowdfunding, which is allowing non-accredited investors to do equity investments either through the Title III crowdfunding or the Reg A Plus offering. So there are new ways for people to get into this asset class, but I think part of what we want to do as people come into this asset class is realize that it is risky, so you should only be putting up to 10% of your wealth in this asset class, and you need to build a diversified portfolio. So if you don't have lots and lots of money, the ability to create a portfolio of 25 companies without millions of dollars is harder to do unless you invest in funds and other kinds of vehicles.
I would think that if I asked 5 women in the room, not in this room, what angel investing was, that they would not know, and maybe not even know if they were an accredited investor. Do you think that there's an issue as far as people understanding what their investment acumen is and what their ability is financially, first of all, and then what their investment choices are?
Oh, definitely.
And especially for women and people of color. Do they have an understanding? And if they don't, or if there is an issue there, or there's a knowledge gap, how do we get the information and the education out there?
Yeah. So the Angel Capital Association has a great website that's basically the trade association for angel investing. We also, Next Wave Impact, has an investor education page that has a ton of different training and educational materials that anyone can use. It is a process, and you should educate yourself in the best practices to do this, for sure.
So for us, it was about learning about existing mechanisms. So we learned that there are a lot of women, first of all, who do have money and want to invest it. That's something to recognize. There was also recognizing that women, oftentimes, at least in Senegal and a lot of countries in Africa, don't like to invest alone. They don't like to engage in financial services or the broader financial markets alone. So how do we keep doing this as a community? If you know West Africa, we have a lot of tontines, or these savings and loans clubs that are just part of the day-to-day and a strong cultural element of how women come together. So it's how do we leverage that to engage in more sophisticated, I'll say, financial products and investments. So do it as a community and leverage how women already come together around money. The other important thing to us was really trying to make this accessible. We've talked about the common language. If you sit in a room with financial experts, it's sometimes the most intimidating thing with the acronyms, the very, very sexy financial products, especially in America. I don't know how you stay on top of that. So how do you make it so that there's a safe space for women to ask all the questions they need to ask without feeling like they're asking basic questions or the ones they shouldn't ask? We have members who lead banks in Senegal who are brilliant leaders, but who have basic questions, or what they would consider basic questions, and are scared to ask them. So providing that safe space has been critical.
Absolutely. Obviously, I'm going to answer education is the way to do this. And so one thing that is so interesting to me is women will come to me and they'll be like, I've maybe invested in a couple of startups, but I'm not an angel investor, right? Or maybe I've invested in 3 or 4 companies. I'm not an investor. And these are women who've invested in Peloton, Vitamin Water, like big, very successful angel investments. And then I will hear, again, I'm vastly overgeneralizing, right? From the guy who maybe did an investment 5 years ago, but they'll totally call themselves an angel investor and it's on their LinkedIn profile, right? And so I think It's interesting. So one of the things that we do is after they take the 37 Angels investment boot camp, we tell them to put it on their LinkedIn profile, because there's something about, I think, again, overgeneralizing, maybe women don't want to seem boastful, whatever the case may be, but if I make them do it, like someone else is telling them to do it, so it kind of gives them the license to wear that investor hat. So that's just a really small example of something that we do. And then kind of something else is just working with younger women, I think is incredibly important, even before millennials. If you look at the abandonment of women leaving STEM, that happens in like middle school. It's at like 7th grade level. So for those of you who aren't involved in Girls Who Invest, that's a great organization to be involved in. Girls Who Code, I'm going a little bit into more kind of STEM stuff, but I think talking to young women, I teach a program at Barnard every summer. They're high school juniors about and talking about kind of this entrepreneurship program. And I think it's just the recognizing that like they can wear that label as well. And so I spent a lot of time at any age demographic talking about that, like, this too, and so it's fine for you to say, I am a blank.
Can I just add one thing, because I think especially among the younger people, but all of us, we have to remember we're all impact investors. We invest every single day by our consumer spending. So we have a choice of where to put our money every single day at any age. And so we can choose the Ubers of the world, or we can choose the Amazons, or we could choose to align our values with our purchasing power.
Absolutely.
Well, and data. So that the information that we use to make our investments in a mutual fund that contains hundreds of different companies, or we're going to buy direct stock in a company, or our consumer decisions, or our shareholder activism decisions, or our employee decisions, if we can get this into the hands of unions and collective bargaining. If we have a standardized data source, so something that's good for women is uniformly understood, so that I don't have to make that decision when I'm trying to decide between 2 different airline tickets or 2 different vendors for whatever, my sneakers, that I already know what's good for women. And I've got a lot, whether it's the UN, SDGs, or some other source that I really have confidence in, so that we don't have to remake that data decision every day when we make every decision. If we can have a standardized source of that information, I think the sky's the limit in how we can really impact corporate behavior or private company behavior across the planet.
Okay, we've talked about investors. Let's talk about the other side, investment opportunities. How do you identify companies or opportunities that you want to invest in to further your agendas?
Well, so in the area of gender, I found out early on that there were many different funds that were defining gender benefits differently from myself. And you asked us about a story. One of the earliest proponents of socially responsible investing was the Catholic Church. And the US bishops came out with a beautiful SRI document in 2003. And I don't really have no intention of offending anybody in the room, but the important thing was that there were some real specific criteria in there that may or may not line up with your own values. And I was finding early on that there were many fund managers who were using that document for their environmental decisions, or for their getting guns out of their portfolios, or other sorts of human rights decisions, and that they were sweeping up the women's issues into their decisions about which companies were in and out. And it was only when I started digging and asking questions about, what does that mean? What does a women's fund mean for you? Oh, we're just using the US Bishops' guidelines. Wow. And so I've learned that I need to have my own definitions, and we've actually working with University of Pennsylvania for the Center on High Impact Philanthropy to help us establish standardized metrics around what is good for women and how do we translate those endpoints, those social outcomes, into corporate behavior. And we still have a lot of work to do.
And you're evaluating individual companies in
well,
that framework.
we need to have that list of what sorts of corporate behaviors. Is it supply chain principles? Is it having health benefits for their employees that include maternity, mental health, contraception, and abortion coverage? In the United States, I think the Affordable Care Act is definitely at risk, and we've taken for granted that women should have those things. So What's the role that corporations can play in maintaining those risks if we can't rely on public policy to do it for us? So those are the types of things that I'm going to be using. Once again, looking for standard data sets to help me in that journey.
To evaluate funds and companies.
Yes.
Yeah, our impact thesis for our new fund actually came out of our pilot fund not having an impact focus. Here we are, 99 women. The 10 investments we made, even though we didn't have a mandate to invest only in women-led companies, we ended up having 9 of the companies have a female on the founding team, 6 had female CEOs, 3 had minority CEOs. But honestly, some of the companies were doing things that I just didn't really care about, I wasn't passionate about. And it really hit home to me that if I was going to really stay engaged and inspired and motivated to use my money and my time and energy on this asset class, that I really needed to feel passionately about what the companies were doing. So the new fund is really, the investment committee members and the limited partners are all very much aligned along investing alongside our values. So our thesis of having a impact fund, we're defining it pretty generally, having a significant positive impact on people, planet, and communities, so that we can be strategic and opportunistic in finding a diversified portfolio across a number of sectors and a number of geographies in the United States to mitigate, the risk of this asset class. So while we're kind of, agnostic, we're looking for all of them to meet that minimum impact threshold.
Ours is evolving. It keeps changing as we learn. So initially it was very much about women-owned enterprises. It's evolved since to some of the broader definitions of gender and enterprise development. So some of the international development organizations have some definitions like IFC, which we have adopted. But I think one thing that's critical for us, it's really working through partnerships in terms of assessing what the right pipelines are. So it's evolving. We keep broadening the definition, and because we're we're trying to create something new. Initially, we had said, for example, it has to be only women investors. We did speak to US-based Astia Angels. It's another, and became a family office investor recently. And they told us, do make sure you include men as your investors. So it also allows you to think more broadly about your pipeline. So we have adopted that in our thinking. So it's evolving. It's changing as we learn more.
Yeah, totally agree with the evolving piece of it. So not surprisingly, because we are women investors, we started looking at the pipeline of the founders that we were investing in. And something that's really important to us is that we have parity throughout our funnel. So the 2,000 companies that we look at are right now 1/3 women, 2/3 men. Our portfolio should represent that. And then we started looking at racial diversity, and now we're also adding, we're working with so Defy Ventures. They specifically invest in founders that are formerly incarcerated. I'm on the board of Ludicap Ventures. They focus a lot on military. And then something I realized recently just looking at our portfolio and also our investors is there's a lot of folks that are highly educated in the network and in our portfolio, I think because we invest in people who are like ourselves. And so we realized we need to be looking specifically at founders who don't have, tier 1 education institutions on their resume and all that kind of stuff. And so something that we're actually working on, and Venture Valley Mentors has done a really good job of this, is taking the applications that come in from the founders and removing as much demographic data as possible, right? So no names, that way you can't tell gender or race, not having educational background and all that kind of stuff. And because I think we all have the best of intentions, but we just all have unconscious biases, we know. And so rather than trying to fix our brains, which is really hard to do, removing that information from the application results in a much more diverse portfolio as a result. So we're trying to do a lot of those things in our processes to, as much as possible, make sure that we're giving every founder a fair shake.
Thank you. One other question. In each of your strategies, how do you folks measure success? And I'm not going to, we can mention financial, but I think we're more talking about impact or gaining value or reaching the right donors.
We believe that our ability to drive towards social impact is just as important as our ability to drive towards financial impact. And we also believe that our ability to build a community and collaborate and influence others is equally as important. We're still working on our actual measurement strategy and our measurement approach, and we've got some great colleagues in the audience that we're plagiarizing from and learning from. But by elevating those things to be equally as important, it's where we're starting from. So we're looking at our human capital, our financial capital, and our ability to influence and bring others into the space as the measures of our success.
Great. Because the field of impact investing is relatively new, I think the evidence isn't, as robust as we probably want it to be. And so success for us will be our ability to be one more point on that evidence piece of you can actually do well by investing in companies doing good things. Because one of our missions is to drive diversity in angel investing, I think another success factor will be training and engaging underrepresented groups in angel investing that continue to go on and be active angels in other funds and angel groups on their own. And then getting really good companies doing good things funded and helping them be successful so that they can grow and scale and hire more employees and do good things in the world. So it's not, we want to make money too, but all those other factors are just as important.
Influence change.
For us, two elements. One is if we see what microfinance has done positively for women in business, imagine if we're able to say we're addressing also the higher investment needs. Imagine what it can do if women know that they can build larger, stronger, more global enterprises. If we're able to elevate to the same place as microfinance took us, imagine what's feasible, but also replication. I would love to see Dalberg incubating many women's investment clubs across Africa and in many other parts of the world.
Here, here. I love analyzing data, so I'll just give you three things that we analyze. One is referral rates. So we look at our portfolio companies, referring companies, and then are the women who took our boot camp referring other women to go in. And both numbers are at about that 70 to 80% in terms of who comes in. So we're very happy with those numbers. The second statistic that I'm really proud of is we asked for testimonials from founders, not surprisingly. 75% of the testimonials on our website came from founders who we did not give money to. So we said, nope, not funding you, and they turned around and wrote us a positive testimonial because the experience was still helpful and transparent and efficient and all those things. And so I think we really look for that as a marker. And then because I'm a total insane geek, we send out surveys, all that kind of stuff, and then I create word clouds based on that to see what are the words that keep popping up and do those match our company culture and how we want to perceive in the network. And I do that for me as a human being, I do that for 37 Angels as a company. And I know you said not to mention finance, but I just want to make this statement that I don't think that impact investing, it's you have to give up upside. We are beating that magical 20% IRR number in our portfolio, even though I shouldn't say even though, but on top of having impact. So I think there's this idea that's either or, and I just fundamentally disagree with that.
Angela, on that point, what do your investors expect? What are the expectations for financial returns and impact reporting, for instance, when they go into a deal? And are you able to meet those expectations?
Yeah. So reporting, they expect nothing because the world of angel investing is terrible from a reporting perspective. So we do share the information, but they expect nothing, which I would love to change. And then financial returns, I think people expect 20% IRR. That's kind of the magical number in kind of startup investing that you want to hit.
And what is the time frame on that? Do you find that some investors' expectations as to returns and the timeliness of that is different than?
Yeah, I mean, the nice thing about IRR is it obviously factors in time, but what we tell people to expect is if you invest in a company, you're going to be in it for 5, 8, 10 years before you see that money come out. So, yeah.
Do you want to take questions? Alicia, do you have anything to add to that?
Well, yeah, just part of the education process is explaining to people that angel investing is illiquid and a long-term play and risky. So I was actually just in Vietnam doing some angel training, and most people there haven't even heard of angel investing. So it's, it's definitely educating people who've never even been exposed to this asset class and getting them to really understand the long-term play that this is and the risk that it is necessary if you're going to get into this. It's a long ride, but it's fun.
Yeah, absolutely. Should we take questions, or do we have time? 2 questions we have.
She's been waiting.
Oh, sorry. Thanks.
Hi, I'm Jody Weiss. Thank you so much for this conversation. I recently met a man who sits on the board of a global insurance company, and he indicated that he felt that the cannabis industry would probably save the pension funds in America because of the tax. There's so much potential profit to be made in this sector, and there's a big battle between the federal government and state over banking. And I was just curious what you thought about that type of a risky investment, what you think about that category, and what we as women should think about cannabis in general as an investment. Yeah.
Well, being from
Who wants to take that one?
from Colorado, I feel like
I went to Berkeley, so I have no moral problems with it.
Yeah, Colorado has been kind of the guinea pig, and it's, cannabis aside, I think we actually have an accelerator for cannabis companies in Colorado. There are some legal risks in investing in the cannabis industry, especially if the businesses actually touch the plant. Now, there's a lot of ancillary products, and that's what the accelerator does in terms of investing in those kinds of companies. But you're right. I mean, there's a lot of potential, and a lot of investors are flocking into this. Some venture funds, larger venture funds are as well. So it's certainly ripe for disruption and scale, and I see a lot of money flowing into it.
And as the doctor on the panel, I feel obliged to comment on the public health consequences. And as a disclaimer, I'm from California, so we're joining Colorado. But I think that it's important for people to understand, and this goes back to some of Dana's comments about we're all having impact, that I think there's some pretty compelling evidence that the states and the communities that are having recreational cannabis availability, there's actually less car accidents and there's less opioid use, so that they're even, it's relative evils perhaps, but there does seem to be a net positive in terms of public health in those communities that have legalized cannabis. So if that helps in your decision making.
Thank you.
Greg Hummel from Bryan Cave in Chicago. I'm curious about whether something like Y Combinator, which works in the Silicon Valley, could work in this space in terms of encouraging entrepreneurship. I have a millennial relative who went through that, and what was really interesting is it was less the money, it was more the coaching and the way that network then proceeded into that venture capital community, which is so powerful in Silicon Valley. Is the ecosystem developing to a point where we could consider something like a Y Combinator in this space, and how might that take shape?
Oh, it exists. Oh, go ahead.
I think we're going to say the same thing, which is 1,000% yes. There's about 100-ish accelerators in New York City. If you actually go to 37angels.com/accelerators, we have them all listed by sector. There's 5 social ones, by the way, if you want to be involved in them. So 1,000%. Entrepreneur Roundtable Association is a great one. TechStars is a great one. Blueprint Health is a great one if you like health. Start Ed is a great ed tech accelerator. And I don't have like a relative favorite social accelerator, but yes.
Impact Hub is another very good global one.
And TechStars just launched their first social impact accelerator in Austin, Texas. But there's groups like Unreasonable Institute and Village Capital and Halison that are actually specifically accelerators focus on helping social entrepreneurs scale profitable social ventures. So yeah, it already exists and it's growing. Not all accelerators are created equal, so there's best practices and so forth, but yeah, it's definitely already here.